What is up, everyone? Fuck, I'm late. Guys, the first second. I wasn't even ready yet. I wasn't even ready yet. Let me let me send the link real quick. We are live. We are live. How is everyone doing? Depending on if you are inside of the Discord, this is either your third time hearing me today or your first time. But I hope you guys had a productive day, had a productive weekend, re-energized, refreshed, not gotten shaken out. Actually were prepared for some potential downside and could have acted accordingly. Okay, but we're gonna dive into all of that. That's something for later. I hope you guys had either a my mic just muted for a second. I'm happy I yo I'm happy I discovered that fast before I was yapping for 5 minutes before realizing. But I think all should be good. I got like a quick little error. So let me know if everything is all good. Let me know how Mike rugged. Am I back? I think I'm back, no? There was a quick rug. I also got a notification. I was like, yo, pause. But is the mic good or bad? All good? Okay. We're good. I think there's like a 30-second delay in this like software programming thing, so I gotta be patient. But yeah, let me know how your past week was, how today was, bro. How today was. It was you cheated for some seconds. All good. All good. But yeah, what a type of price action. Like honestly, it's absolutely crazy. I'm always pretty fascinated by it. I'm always very interested in, market behavior and just like seeing the crazy things happen. Liquidation volume was already extremely high going into the week, and we got a massive liquidation event. And I think it's way more than 2 billion. I know where the 2 billion number came from, and if that data is like verifiable, but overall the moves that we got, especially on ETH, bruh, it's 30 to 50% corrections in a few candles in a few hours. So that gotta be a lot of fucking money. Okay, that gotta be a lot of money. So I think today is going to be an extremely valuable stream because I really want to emphasize on you guys starting to make decisions for yourself. Okay? I think you deciding to truly start making decisions for yourself, slightly getting influenced by positive figures in the space, valuable figures in the space, is going to be something that's going to be extremely valuable to you and also just your journey. Okay? Because especially when you are starting out, especially when you're starting out, you try to obviously find some sort of mentor, some sort of person that you can learn from, look up to, and take trades from, and overall just valuable insights. But when you're in your early stages, it's very hard to filter what is right and what is wrong. Because you don't know, right? You don't know when you're just starting out. So we're going to be talking about just general high time frame playbooks and how you can play high time frame pretty easily, right? Pretty easily. I'm not saying it's easy, but just doable, right? Doable, especially through spot, and at the same time kind of allowing you to start creating your own narratives and your own pre-planning and your own executions. And obviously you're going to make mistakes, but you're also going to make mistakes if you follow other people, right? Because someone else can actually make some money during his own calls, but because you're always, behind because you're needing to see his information before you can make yours, you're always going to be a step behind. So it's very important. We're already with 400 people tuning in. It's very important that you learn how you can start making decisions for yourself. And then once you actually start to learn and you actually start to gain some valuable insights and you start to develop as an investor and trader, you're going to also be able to filter better some of the nonsense out there compared to actually valuable and educational and quality information. Okay, so the title already says it. Most holders will eventually turn into traders. Crypto market update. Okay, so I'm going to be talking about ETH in the beginning because ETH has obviously one of the most insane charts at the moment from a volatile perspective, and I definitely want to dive into that because that dumped even deeper than I initially expected. I think that most people initially expected. But that doesn't mean that anything changed from a planning perspective. You guys know my trading style. I'm assuming most people tuning in the first 6 minutes, you guys know that I like to have my range creations, my accumulation, distribution models, and find that pivot point with a very refined stop loss, refined entry that way to catch those nice RR moves. And typically speaking, the big moves themselves are not typically my entry confirmations. I can be already in a trade, I can already be in a pretty aggressive, or I can be in a good position prior to an aggressive move happening. But, entering on leverage in an aggressive move is just simply not my style. I traded through spot, but not through leverage. Because spot is way easier. You can find and identify those high time frame key POIs, set spot limit orders there, and scale in using the 40-40-20 rule that I always go by while using also a mental stop loss. Lots of people were asking me, hey Lars, do you use any trading bots for your spot buys? No, I trade spot on the SEX, centralized exchange, typically on Bybit and MEXC, and don't use leverage at all. Also no 3 to 5x leverage positions, just spot. And if price invalidates my high time frame key level and I had an initial investment from there, then I cut that loss, right? So many people actually marry their spot buys and they completely differentiate their trading behavior from leverage to spot. Well, you can just trade spot the same way you can trade leverage, just a bit more flexible with, entering on limits in key POIs, overall having higher time frame invalidations and trade it that way. But diving into the ETH chart, I want to take it one step back from the beginning when I was initially talking about this PO3. Okay, so the main focus I had in this current range was that this range ended up being a PO3 schematic where we can see this range creation never took that initial range high, building that return to zone within the range, and that we manipulated below that range very beautifully. It was just very hard to find an entry to validate a high probability PO3 schematic because you never took that low. And even if you don't take the low, sometimes it's fine that you don't take the low, especially if this low liquidate a lot of people, because then this low doesn't become a liquidity target. No, the low actually grabbed the liquidity. However, we also didn't really have an internal accumulation. And from there, we had that expansion back up. And this was the first major signs of warning where, we were in this compressing effect. And there was a potential of a breakout. There's always a potential of a breakout. But you have to realize, I think I'm one of the few people that actually trades PO3s where the technical target of the PO3 is the range high and not just some absurd number higher. Lots of people that use PO3s, they extend their target, and I don't even know on what data they base that conclusion. But I have always traded my PO3s where the technical target is the range high. And from there, you can cool off and then either reverse or reaccumulate and continue higher, right? So what we saw right here was that, the completion of this PO3 schematic where we actually deviated, also above that trend line. And it's pretty funny because on a macro scale, we deviated above this trend line. And locally, prior to dumping aggressively, we did the exact same. But we're going to dive into that. But I want you to just analyze this, right? And obviously, most people are going to be trying to teach you it in hindsight. I want to remind all of you that we actually shorted the highs, okay? So I'm not talking in hindsight right now. Obviously, this aggressive move is something I initially not expected, but the overall pullback to around 3K, which at that point in time is already around 25%. That was my initial expectation, and to kind of find support in that area. But obviously, you shouldn't have gotten trapped because there was no proper entry confirmation here, and then no entry confirmation on the liquidation move down when I was asleep. But we're gonna dive into that. So first, when you're looking at the high time frame, I think most of you, right, that have a basic understanding of TA, or at least a basic understanding of the TCT mentorship, where I teach you about the PO3s and the range creations and the liquidity rules. You can identify for yourself that, we are deviating our range high. It's very normal that a PO3 expansion, can cool off after completing the move and mitigating the target. So looking for a potential short is not weird at all. Okay? Now, I'm saying this with a very big exclamation mark on not weird at all, because if you talk about it, you are considered weird. That's typically the thesis. So we swept this range high, and anyone that has watched lecture 1 of the mentorship, where I talk about basic market structure, after deviating your trendline high, sweeping your range high, and breaking your high time frame structure from the most recent range rotation up back to bearish right here. It wasn't daily structure for the people that are paying very close attention. It was 18-hour structure, okay? Breaking that back to bearish, what is expectational order flow? Like, what is generally expectational order flow after grabbing a major buy-side liquidity point and then breaking structure back to bearish? This isn't, I wouldn't even call this advanced high-quality TA. It's a basic understanding of a liquidity sweep and market structure. Expectational order flow is going to be a lower high for a lower low. So exactly from that contextual perspective, was I looking for a lower high for a lower low? And then the market decided to bless us with a textbook PO3 distribution schematic. And we need to pause here for 1 second, because I'm not going to go in detail behind why this was a PO3 and how you could have traded it, because I already did that very extensively on X and also, I think also on YouTube. But we got a picture perfect PO3 schematic, which was my initial target, sweeping that 3K liquidity. Okay. And this is where you need to actually reflect back on your own behavior and ask yourself, why wasn't I bearish, or at least very cautious, when price was approaching that 3.7K area? Did you even think, okay? Did you even think there was a possibility that after deviating the high of your compressing range, you could maybe have a full-on rotation to the lows? Because typically, when you're range trading, and I'm trying to keep it very basic here, if you deviate the range high, there is the possibility that you go towards the range low. Now, this is not a range, and you will not see me use these trend lines that often, but when they're there on the macro time frame, they're there, and they should definitely be paid attention to, because retail pays a lot of attention to it. But if you deviate that trend line high, you can always have the possibility, no matter how slim, but always the possibility that you're going to have a rotation towards your trend line low. But just with me pointing out extremely obvious high time frame order flow expectations for a lower high for a lower low, targeting normal sell side liquidity after sweeping all buy side liquidity, causes massive disruption. But then I don't really care that it causes such, uncertainty and hatreds towards the setup in most people's and most retail investors' mind, you want to ask yourself, why do you even get so defensive if someone lays out a simple scenario, right? And I'm not talking specifically to all of you. I'm assuming most people watching, you guys are already wanting to learn. But, we have 600 viewers. This ETH post, it hit around 50K views. That's why it went pretty crazy. But why can people look at the charts objectively? And maybe you were trying to look at the charts objectively. Maybe you even saw the PO3. Maybe you even saw me trade it, but you still didn't act accordingly, because that's also an issue. Maybe you were aware, but you still didn't act accordingly. Then you need to ask yourself, why did that happen? Okay. What caused me to not pull any triggers? And it's very important here that you actually sit and reflect your own behavior. Every single trading psychology book, if you want to improve your psychology, it's like building a muscle. You have to exercise it. You have to actively reflect back on your behavior to identify patterns. Because what could happen in the future is that this might be the low on ETH, and we're going to have a reversal back up. It's an opportunity. Why? Because we deviate our trendline low, sweeping all sell-side liquidity. So we could be going for buy-side liquidity now. The exact same reason why I'm not turning bearish here, but turning more bullish, despite having a confirmation yet, but just as an overall expectation, no confirmations yet, is the exact same reason I turned bearish here. But there are way more people wanting to turn bullish with me than bearish with me at the highs. So if you want to improve, you need to analyze your own behavior. And just with simple liquidity concepts and market structure concepts, you didn't even need to know about the PO3 to expect a lower high for a lower low. Why didn't you act accordingly? And then multiple answers could be coming above. You're like, okay, well, I was afraid to potentially miss out on like a generational breakout. And then you can ask yourself deeper, why? Why were you afraid? Why were you watching for a potential breakout? Right? And that can be also through propaganda, through following the incorrect accounts that are promoting higher prices when they haven't called any high time frame pivot points. And that could have indirectly influenced you into being scared of making a decision. But you need to reflect, because going forward in the cycle, okay, is going to be more and more manipulative. Because you can just see, based on what has currently happened on ETH, it changed the entire state of the crypto market and the overall cycle theories. The 4-year cycle theory can still be there. But looking in the past, what happened is that you had 2 to 3 cycles kind of to look back on. And overall, in those cycles, very similar price behavior happened, with Bitcoin going into price discovery, altcoins following afterwards. The very typical money flow rotation from high to mid to low caps. And what they've kind of done now is completely disrupt that narrative by sending Bitcoin into price discovery, sending Bitcoin to 100K plus, making Bitcoin range at 100K plus, when ETH has never even made a new all-time high, with Bitcoin correcting ever so slightly, causing ETH to have an extra dump of 40%. This was a 40% correction on your top 2 coin. So just by manipulating price in this way, they have now completely disrupted the idea of expecting a quote-unquote alt season, whatever your definition of alt season is, to follow after Bitcoin goes into price discovery. Because I'm already thinking of next cycle. Next cycle, you cannot look back and make a very obvious statement and decision, because you have to look back at around 3 variables where 2 are the same and 1 is completely different. And if you do any type of back testing and, data science, you want to make a conclusion based on 3 points and 3 pattern recognition variables in the past, and one is contradicting the other two, you cannot make an informed decision for the fourth one. That's just the name of the game. So just by manipulating price in this way, they've now completely changed, okay, the entire narrative going forward this cycle and the future cycles, just by holding price back the way they have been doing it. In case it still is going to run. Who knows, right? Who knows? That's not what we're here trying to do right now. So you need to analyze. You need to ask yourself, why did I not sell anything up here? Okay. Was it just part of my plan? Was it part of my strategy? Then that's good, you know? I would highly suggest to have multiple portfolios where you actively buy and sell, leverage trade, investment portfolio that just holds, you know, and kind of vary it that way. But at the same time this distribution happened, you know, I was also talking about Andy and the high time frame distribution, and I got laughed at. My followers believed me because they saw the track record and they were like, let me just look at it objectively and make a decision accordingly. But other people didn't believe me, right? And then also Andy dropped even harder than I initially expected. So my general expectation, which was a simple correction of around 50 to 60%, got already laughed at, and then the market dumped price 30% more than my initial expectation. Isn't that crazy? That even me, who prepares for almost all scenarios, got his expectation exceeded with a scenario that wasn't that pre-planned. The scenario with the bounce from here was pre-planned, not the scenario with a bounce from 2100 was particularly that pre-planned. Okay? But you need to ask yourself, why didn't you act accordingly? What was holding you back? Who was holding you back? Reflect, analyze. Otherwise, you're going to keep making the same mistake going forward. And I cannot stress this enough. Just take one day, okay, your Saturday, and check, why am I in this position? Why have I round tripped my gains over and over again? Dive deep into those answers. Dive deep into it. But you need to reflect, because otherwise you're going to keep on making the same mistake. Because I'm going to keep on posting pretty accurate TA, and you're going to keep on not following the calls. But even if you follow the calls, but you just don't have a general understanding of them, you're going to be way more insecure about them because you simply don't understand it. If you understand it and then you see me do it, you're like, oh, he's just confirming a thesis I already had because I want to improve, right? That's why I put that mentorship out there for free for you to study. It's that simple. You can study that and get a general expectation of what the market is going to do. You do not need it for leverage trading. You can start leverage trading with the knowledge, but especially just market structure and liquidity and range theories are going to get you a heck of a lot further in investing overall. Because this type of price behavior is literally and will eventually turn almost every holder in wanting to be a trader. In that process of doing so, a lot of people will just fall off the map because they can't handle being a trader because they just don't have the mental strength for it, because trading is a different game. But talking about ETH, right? We got that PO3, and then initially I was watching for this to turn into a accumulation model, right? And I was like, am I truly about to miss out on, a generational entry because the market is not going to give me any structure? But I told the team at the same time, I'm like, there's simply no confirmation. I'm expecting it to squeeze a bit higher based off the liquidity that's located there. But technically speaking, the accumulation never got confirmed because you never had a breakout structure, right? So I want to put the OTA back in the chart right here. Put the OTA back just like that. And we bounce from this 6-hour demand. And then if you watched last public stream Friday, you will know that there was no confirmation in here, because we literally came up leaving all these sell side liquidity lows below, and we had this return to zone above, right? We had a return to zone above that kind of got, disrupted with this PO3 supply. But overall, I'm not a massive fan of PO3 supply, because my general expectation was, okay, if a market maker was going to short here and he wants to accumulate in here, the TPs will get taken at that extreme liquidity point, and the focus should be from the long side. Now, looking at the volume profile, sometimes that thing turns black. I don't know why it does it. There you go, blue. We have a very well distributed volume profile. I'm kind of repeating myself from what I said Friday, but overall, if you have a very well distributed volume profile, your volume area low and your volume area high, and for the people that are interested, these are your inputs that I have, okay, to get the most accurate results. They tend to be very good support and resistance levels, okay, only if it's very concentrated like this. Typically, you kind of deviate it. You can see it kind of gets deviated, but it does get respected, okay? But like I just said in the beginning, remember that deviating your trend line, expecting a potential reversal back down. The same time that I was watching a Model 2 accumulation schematic that, again, never managed to get confirmed, lots of other people were watching this trend line. And it was actually a picture-perfect trend line. Now, I am never a big fan of trend line, and this has made me an even lesser of a bigger fan of trend lines. Because what happens is that a lot of people, they understand kind of this. I think it was a falling wedge. If I remember, I think people were watching a falling wedge, which is a pretty famous. I remember me studying falling wedges when I was just starting out. But typically, the kind of like general consensus regarding falling wedges is that price is kind of like compressing. I don't know how exactly they draw it. I think something like this. Yeah, I think like this. And the general thesis is that once you start to break out from that falling wedge, you're going to visit the high of that wedge. That's generally the thesis behind it. However, it's a very famous retail pattern, and obviously market makers make use of that, and they realize that the moment these candles get these high time frame closes above that trend line, you literally see volume spike in right here on the lower time frame. I was talking about this. You saw the volume spike in there, comparing it to the volume in here, neglecting the sell. You can see the volume spike in that point of people literally breakout longing the break of this so-called falling wedge, and price literally mitigating its first resistance POI, which is the volume area high, after sweeping your first liquidity point. So I was like, okay, there are two possibilities here, right? This can simply be a quick little fake out where you come back down for the higher low for the higher high, where the purpose of this highlighted move down between these 2 points is to liquidate the initial breakout longers, which is something I would have preferred, because then we could have gotten an easy entry back towards your range high, trading the accumulation. But again, the accumulation never got confirmed. Okay, it simply never got confirmed, and we just dumped down. Like, there was no entry confirmation in here at all. And then we just slowly grind it down, sweeping all that liquidity. And then at around 2 to 3 a.m., we just had that very aggressive push down, right? So overall, no confirmation of the accumulation. And I know the down, if there's no confirmation of the accumulation, no matter if it's ETH or not, and you have a very famous trendline pattern playing at the same time, because I really don't have an eye for these trendline patterns, you got to be careful. Now, still, there was no short opportunity for me personally right there, but what a move. What a move down, sweeping all that liquidity. But I am just surprised by the lack of awareness I have seen some accounts create for just simple downside. It's not that you're betting on a bear market. It's just, making some people aware of some downside is okay. Just mapping out different scenarios is okay, but there has just been a lack of so many accounts of just no awareness for just any potential downsides, right? And I can already tell you guys right now no matter which event, whether there was an event or not, aggressive moves in crypto where billions of dollars get liquidated, 40% corrections on majors in the span of 2 days, but then the dump candle in the span of 4 hours. If you see a 4-hour candle dump down almost 30% on ETH, grabbing major liquidity, price is going to get rebalanced, okay? Because it's an overreaction to what is going on. It's an overreaction, and price loves to rebalances itself, okay? Because what actually happened here? Nothing. I don't know about you, but there was no external news event that could have caused this. It was literally a massive liquidity surge, and price loves to rebalance after, okay? So whether that means that you immediately get a V-shaped reversal, like I said in this morning's post, that's not up for me to decide. I would have loved if we could have got like a higher low right here with a nice little accumulation that we can take towards buy-side liquidity. But if you want to have a V-shaped recovery, something like this, where we truly had that sell straight into that buy before forming some sort of a consolidation, because trust me, some sort of consolidation will form because the market isn't strong and aggressive enough to continue with these V-shaped moves. That is also fine with me, if that happens afterwards, and then I will catch my next trade. But it's in these moments where you grab that obvious sell side liquidity point, deviating again that trend line, that you then need to switch biases and think, okay, that was a massive liquidity surge. That's an imbalancy in the market. Let me search for high time frame key POIs on my different high volume altcoins that I can watch. So this was a scenario that was, a bit lesser unlikely to completely pre-plan. But grabbing one other chart real quick, if you guys have watched my 22-minute video explaining why SUI was going to dump 50%, literally at the exact high, you would have gotten this POI as well. It was the most perfect POI to bounce. I'm not going to explain why it was the most perfect POI because I explained it to you in the video, okay, where we literally said right here that price was going to dump down and there was a high chance of sweeping 2.8. And obviously with the liquidity there, you can expect a massive wick, okay? But just simple charts like these, right? This is what you want to focus on. SUI overall has been a very strong performer. But that doesn't mean that the strong performer cannot dump a total of 55%. That is completely normal. But again, when I post a video like that, you have some people talking about, if this happens, I'll give you your flowers. If it doesn't, I will correct you. That is the most bullshit thing to say as someone in my comments. If it happens, I will give you your flowers. If it doesn't, I'll correct you. First of all, why would I care? Second, if I am correct, you're most likely not even going to give me my flowers. And if I'm incorrect, I'm going to get hate. And if you do give me my flowers, you're going to be like, oh yeah, good job, kiddo. Or, oh yeah, good job, buddy. I'm telling you, if someone calls you a fucking buddy in your comments, there's something about that word buddy that's just like, that you just want to beat the motherfucker up. You know what I mean? I'm like, what do you mean, buddy? I'm not your buddy. I was like, there's something, I don't know what it is, but there's something around that word buddy that I just don't like in the context it's used. You know what I mean? You can say, oh yeah, he's my buddy, But if it's like, oh yeah, all right, buddy, I'm like, you motherfucker. It's like, oh yeah, I'm gonna give you your flowers. And then he says, oh yeah, good job, buddy. But again, guys, I want to put importance. There are very few people, okay? There are very few people on X that are actually good traders and good educators. Okay? You have very good educators, but they don't particularly show you live trading examples and actually live call high time frame pivot points. Then you have amazing traders that don't particularly explain what they do. They just call it pretty accurately. Then you have traders who do both, that upload a 22-minute video explaining you in depth why we're going to dump, so you can actually learn and analyze it for yourself. And then you have people that do that, analyze it for you, post a 22-minute video, be accurate, and be fucking doxed. And I'm sitting right here. Okay? Very little people that are doxed and doing that shit. Because that's also different. Faces out there. It's truly different. But what I said in that video, if you look at SUI, you have a high time frame structure pool, higher low and higher high, right? This was the most perfect POI for a bounce. High time frame structure demand getting overlapped with lower time frame structure demand, where the lower time frame structure demand had the exact same playbook that was high time frame and low time frame within that block. It was a beautiful block. This was your most refined area. That's where you perfectly bounced from. It was perfection, okay? If you wanted to have any spot buy limits, that was your POI. Absolute chef kisses, okay? And you can see that right coming into that, when price and the charts are having that overreaction to everything, people turn into ultimate fear. Why? Because they weren't prepared. How can you blame someone? Okay, I'm going to say it again. How can you blame someone from being fearful when you haven't prepared them for any downside? Okay, if you were prepared for the downside, guys, if you even did not take any action for any downside, but you were aware of the potential scenario, you would have acted better. It's so simple. So many problems in your life in general can be solved if you are simply aware of what is going on. But people in this world are not aware because they got dopamine distractions in every corner they look, with social media and their fucking smart devices and their friends and parties. No one is fucking aware of shit, okay? And I'm telling you, I'm also reading this book, right? I'm reading this book for psychology. If you are simply aware of the problem diminishes. If you are aware of the downside isn't that bad. But you need to be aware, and you need to get rid of any confirmation bias that you have. I have 1,100 people listening to me right now, and 1,100 people, I'm telling you, there must be at least 30 to 40% that was fearful on this move down, meaning you weren't properly aware. Okay? So if you are simply aware, you don't even have to be right. You just have to be aware of a potential scenario that it could happen, and your trading and investing will change. It will change. In combination with some high quality TA, which is given to you for free, explained to you in hundreds of hours of post-trading analysis videos and educational videos, with the combination of being aware, you're going to make it very far. Already as a spot trader, okay? Because then what happens? You become extremely fearful when prices are going down. You want to capitulate, right? You want to capitulate, but maybe you don't. And then you see a generational bounce where from these high time frame pre-planned key POIs, prices move up 50%. And then you're like, oh fuck, this can be the bottom, because you flip-flop biases, right? And you FOMO into buys after prices already pumped 40 to 50%. And like I just said, this aggressive V-shape like reprice action is not sustainable, and price will eventually create some sort of range. And when that happens and you reject from a simple POI and you FOMO it in around here and price goes lower again to create some sort of a bigger range, whether this is going to be the range and you get an entry sweeping the low, or you get an internal entry within this range where you get something like this, right? Kind of like an internal accumulation, confirming this as kind of like a higher low. It may seem very easy in hindsight again if it goes higher, but in the moment, you were just very fearful that your backs were going to go to zero. Then you jumped back in because you're like, fuck it, I'm going all in because this can be the bottom, to them being down on those investments another 20%. And that makes you capitulate, okay? And then you actually go higher. And now you're in this terrible position financially and mentally. But FOMOing into these buys is literally a result of being unprepared with your pre-planning. You weren't prepared. Okay? You were not prepared at all. Otherwise, you wouldn't FOMO into these positions. So, being aware comes from pre-planning, because you have to be aware if you want to pre-plan in general. And then things like fear, and not even fear, because fear you can feel, but impulsive behavior based on how you feel, that will not be there anymore because you have every scenario mapped out and you know what to look for to execute one or the other. Isn't that going to be so relaxing? I got so many messages from people telling me from different levels. I got people telling me that they literally doubled their SUI portfolio in amount of tokens holding because they completely sold everything up here. I'm telling you, if you watch that 22-minute video, it was literally from right there. We were talking about that retest. I just didn't get a leverage entry because it was at 11 p.m. on Friday and I missed it, unfortunately. Okay, but on spot, I got so many people texting me that they either doubled their tokens, where I'm like, okay, well, I never advise selling everything. Okay, I never advise selling everything, but I'm glad you had the trust. But also just people who are starting out, who told me, you know what, I truly did not want to sell from a feeling perspective. I didn't want to sell based on my feeling, but I just sold 15%, or I just sold 10%. Just to have that sell order, to rewire that brain that has been brainwashed by literally bullish flip-flops here and there. Okay? We're going to call them flip-flops. Bullish flip-flops. And they now had the first time that they sold, even though it's a small amount, that they sold and bought back lower. And for the first time in their investment career, they have actually benefited of a flash move down. And that can already give you the confidence that you need to nail it in this cycle going forward. I don't understand, okay? I don't understand how these engagement farmers still get so much engagement when they haven't been accurate in pivot points once. I don't understand it. I truly don't understand it. But I have 1,200 people in here, so I don't think I'm particularly talking to those bots. And I do think a lot of it can be bots. I'm right now thinking of like a crypto, like the crypto wizard guy, and like the car from the moon, and I don't know if BitBoy is even doing a thing, but just these high show accounts, that I do think that it must also be a lot of bots. But yeah, you can see it was very obvious. If you are interested, which you should, if you're watching this stream, you should be interested in being able to identify this yourself. This was the most easy, okay, and I'm gonna say fucking easy because we nailed it to the fucking cent. The easy high time frame pivot point call I have had in a minute. Maybe even easier than fucking Bitcoin. You know, not from a leverage trading entry, but from a spot play. Because the leverage entry was a bit harder, but from a spot trading perspective, literally, if you understand deviations and you understand distributions and you understand PO3 and you understand liquidity, every single thing from the mentorship based off market structure, literally, if you watch the 22-minute video, you go to my X profile, you type in like the ticker SUI, you will see the 22-minute video pop up in the search filter. Watch that. It was a combination of exhaustion through market structure, PO3 through ranges and distribution models, liquidity concepts with grabbing buy-side liquidity and leaving liquidity below, and market structure on the macro time frame, with demand being an obvious POI. It's everything in one play. Everything combined in one. So it's like, it's all there for you to learn. It's all there for you to learn. But if you cannot cry and you cannot be upset about your portfolio going down if at the same time you have all this educational content given to you for free, available to you to watch, and you're not benefiting off of it, and you're not wanting to improve. I also see lots of people joining the server, joining the Discord server, which is amazing, but I don't want you guys joining the server. Oh. Am I still good? We're having trouble streaming to X. This may be an issue on X end. We will keep trying and let you know if it's resolved. Please check X to ensure the stream looks okay. If it continues for a while, try creating a new live stream. Let me double check. I don't know if everybody is watching on X. Let me check real quick. I've never gotten this error before. Yeah, YouTube is good, but look at this. Not available anymore. Okay, well, I don't know what that's all about. Okay. A little interruption. X is currently having an issue. Then we're on YouTube. Fuck it. But totally lost my train of thought. Oh yeah. I don't want you guys joining the server to then wanting to be given a handout. No. If your eyes have finally opened to the amount of manipulation there is on social media with crypto, and you see the bigger picture now, and now you want to put in the work and take accountability and start taking action the most effective way, that's when you need to join the server. Okay? That's when you need to join the server. But looking at ETH real quick, yeah, bro. General expectations going forward. We have a beautiful V-shaped recovery at the moment, which is literally not where to recover such a dumb candle pretty quickly. You have to just look back at previous instances when price had such an aggressive push down. What you typically see is price kind of recovering until it finds its sweet spot from a resistance POI. And there, if I had to draw a POI, that'll be right here. So this is definitely a decent supply POI. It's a pretty big zone. It's kind of the entire buy to sell. You can refine it down. You can use some fibs. You can use whatever you want. I'm just going to watch the range, plays in there. You have a refined supply zone up there as well. And then you obviously have the supply zones right here in that pivot point of the PO3 and the supply zone of the pivot point of the first deviation. But these are definitely great supply zones to be looking at and to be looked at first. You have a lower time frame supply here as well that I think we're currently tapping into. just didn't tap into it right here on the 5-minute or the 3-minute. Yeah, right here on the 3-minute time frame, you can see your structure supply that's making lower highs and lower lows and then break structure very aggressively. Okay, so that leaves an inefficiency right there. Therefore, this is structure supply valid to watch. What you'll typically see in V-shaped recover, like a V-shaped type of environment when you're trading is some sort of a range creation. It kind of depends on what it wants to do. This is a major liquidity sweep, so I don't think you're going to come back to this low. I think that's a very good low. And if you're going to come back for it, it's most likely going to be for a higher low for the higher high. But what you typically want to trade and what would give the best entry opportunities is kind of forming some sort of, a range in here where maybe you get some sort of a distribution model and you can scalp short and scalp trade this down to some demand either in here or some liquidity targets in there. Whereas if price does get that rotation down, that's going to be the high time frame, higher low that then ends up getting some sort of an accumulation that you then look to trade with the 1, 2, and the 3 that you can take towards some buy side liquidity targets in here. Okay. Or if the distributions aren't that clear, you get some sort of an overall consolidation that then hopefully that's going to give you some sort of an accumulation model that you can trade going forward, where you kind of leave these lows behind. It's not that the first thing or the first time I've seen lows getting left behind after a V-shaped recovery. But typically, if you look at also the mentorship, when I talk about low time frame ranges going over into high time frame ranges, it's very normal that after a V-shaped price action, you start some sort of range, whether that range is going to be starting in here, or maybe even way higher up if it wants to fully reverse. You can expect price to have some sort of a low time frame distribution, and then that low time frame distribution can be the pivot point of a higher time frame range in the making, something like this, where then this ends up being that higher time frame range just there. And then that range ends up either, being a distribution on the higher time frame that slowly hits the target, building that liquidity to then turn it into an accumulation and go higher. Like these are all different scenarios that are just going through my head. Low time frame distribution into accumulation, creating a bigger range, that deviating, creating into a higher time frame range. All those concepts are all possibilities, but we simply have to see and watch what price action gives us. But typically, when you look at these V-shaped recoveries, there's a moment you can use. I personally don't use exo charts. With exo charts like a software where you can see all the buys and sells in the candle, but there's probably a candle in here on the lower time frame where at a certain price point it has the most volume. Okay, it has the most volume and buys coming in actually, and that's probably going to be the place where you're going to bounce if you do come back for there, and you can identify it in the wick where you're going to get that bounce. But I'm not really interested in even knowing that because I'm going to trade not the reaction from it, but the confirmation coming into it if we do come, back for it to kind of fill that wick partially, which would be my preferred scenario. If I had to give a preference, I would love to kind of reject from here, start kind of like a range, reject from there, go lower, sweep some of these lows, and then from there partially fill that wick to get some sort of a nice accumulation going on, maybe some sort of more rangy price action to then eventually go higher or something. That would be my preferred scenario. Nice little higher low for the higher high, making it fairly easy for entry opportunities and also people to probably be afraid to call for, these prices. And then, then you have the general thesis of, okay, we lose that low, what's next? So we're going to just wait for our confirmations. All I know is that I'm not the trader that turns bearish when we literally deviate our, it's so simple. It's really not that hard. It's not that hard to turn slightly bearish and be cautious when you're at the highs after extreme buy-side liquidity sweeps and break structure back to bearish. And it's not that hard to not be bearish and turn slightly bullish when you sweep all sell-side liquidity and you deviate the low. Like, I'm generally not doing something that is that extremely hard and that extremely difficult. I'm just very aware of the general feelings and sentiment and confirmations through market structure and liquidity that allow me to just stay objective, right? block out the noise, filter it, and get to work. Literally, get to work. So, can ETH go up from here? Yeah. The same way we just deviate the range low, we can go back up again, right? Maybe we want to break out this time. Who knows, right? Who knows? Is it weird to spend some time in here? Maybe reject from there and spend some time in here? Absolutely not. Absolutely not, right? Looking back here, when has price put in such an aggressive candle on the daily? Check this candle. When has price put in such an aggressive candle on the daily and then not spend some price action afterwards? Like, you've never seen a wick of that magnitude where, this just reverses back up and price spends no time in here. Like, you don't see that anywhere in here. Like, you had a massive wick in there. Look what you did afterwards. Very long consolidation. You had a pretty big pump here. Look what happened. You filled it right after. You had a pretty big pump right here. What happened afterwards? Consolidation. What else? You had a pretty big dump right here. What followed afterwards? Consolidation. You had a pretty big dump right there. What followed afterwards? You filled it. So every time you have a pretty big move, price tends to kind of like fill that wick, spend some time, consolidate before making a next major pivot point. So my focus is going to be on catching those low time frame distributions, taking them into mid time frame trades, and then catching the next high time frame pivot point before price truly starts to move. And if we fully reverse back up from here, be my guest. I'll have some spots that are printing, and I'll wait for my next high probability entry model. But you just got to stick to your set of rules and trade the confirmations and not your feelings. Okay, so absolutely crazy what happened. I do have to say, guys, this is not something that has happened really in the past in these current market conditions and the current, timing, quote unquote, timing of the market. So if this is your first cycle, respect. If this was my first cycle, I would be fucking beaten up right now. So definitely you can give yourself a little pat on the shoulder. Give yourself a little pat on the shoulder for still sticking around, wanting to be better, and not having given up already. Okay? Let me check the chat real quick. But do we have time to consolidate there on ETH? Why wouldn't we? Crypto markets have all the time in the world. Trader, could you please check SPX? Low key, I'm pretty curious, actually. I am pretty curious. I'm typing in SPX right now, but I need trading view. I recently did some high time frame today on SPX, but I don't know how that has developed going forward. Can I get what's the name of that chart again that I always use? I forgot these names. I'm just gonna use SPX then. Or can this give me something better? Okay, I'll use this for now. So overall, I was expecting price to slowly start to kind of like top out in here, create bigger ranges, create potential bigger distributions. It's pretty lower time frame still. But what did I pull? I pulled that monthly negative fib, right? Let me check. Yeah. All right, that's what we tapped into. Yeah, so we're definitely coming into an area of resistance. Zooming in on this range, it's not the cleanest range yet from just a range perspective, because what kind of happened is that price, and I'm referring to this higher time frame range right here. What kind of happened in here is that, technically speaking, you could be having a 1, you could be having a 2, and you could be having a 3. Kind of the same way that we talked about Nvidia, and expecting that drop on Nvidia. But this is not the same. Is not as of a high probability model as the call on Nvidia, because this range, it didn't really have proper sideways price action. you kind of had your own little range in here. And then you had a pretty structured move down with lower highs and lower lows. And then you had a very fast move up, right? So it's not that I truly have very proper sideways price action within the range. But technically speaking, price has a 1, has a 2. Looks like it came for some sort of like extreme supply, extreme liquidity. Now, mind you, I don't know if I'm on the best chart to use because this chart is a bit shitty, but with all the gaps in the chart. But you can see right there, extreme supply mitigation, and then you have some sort of breaker structure right here. You would have indeed that breaker structure. Back to bearish, a bit low to my liking. Also on Friday night, obviously not the best, but you can see you gap down because of that breaker structure, and left some supply behind above you right here that price can come back into for a lower high. So I would be more confident in calling for a rotation down to the technical target being this low. I will be more confident is price can actually go lower first and slowly go up. If you can slowly go up into that POY, creating some nice time displacement between this tap and that tap, building some new liquidity here. Only if that happens, I would be truly confident in calling for that technical target to be met. Because now it's a bit of it does meet the requirements, it does meet the technical points, but it's not that I'm like, okay, you definitely got to go there. I would trade it. Nvidia, I would trade. This wouldn't. Now, at the same time, I was also talking a lot about JPN 225, okay, which is the, what do you call that? Nickel, you name it. It's like the top 225 in the, what was it, like stock, Asia stock market, Japan. I really remember. I just remember it was a very nice setup. So I was talking about this here. This is what you want to see. These are proper distribution models, okay, where you build up that trendline sell side liquidity. You have your initial range high. You deviate it once, you extend it to your deviation high right there, and you deviate it twice, indicating a Model 1 distribution. You break that structure back to bearish, slowly grind up into the perfect retest POY. Again, low time frame supply, backed up by high time frame supply, also the volume area high, and then the entry itself being an extremely high probability Model 1 distribution. This is the easiest play of the century, okay? Very, 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 very high probability model. The only issue is you had to take one L right there to get the W. So you had to lose 1%, okay, to gain. That was a 2% entry, 1 to 7, around 10 plus. Literally, guys. Okay, so, and that's just the probability game as well. You guys understand in trading, it's all probability game. So initially there was a beautiful entry right there. And then on stream, on the public stream on Friday, we got this beautiful entry. And I was literally saying, I'm expecting this to gap down on Monday open. And we absolutely gapped down. So overall, the high time frame order flow objective and the technical target of this distribution is to come towards this range low. But that doesn't mean that we can get a back test before actually going lower. Overall, this trade should be de-risked. So your stop loss should still be there because you have supply creation at your entry. The price can come back for it to put in that lower high for the lower low. But you should take a TP here that equals out your stop loss amount to be at least de-risk and even maybe realize some profits, because like already being up 10% is an absolutely amazing number. Now, the reason why I'm talking about this is because this does have the opportunity and the possibility to turn into a very high swing point, where what happened here on the nickel or Nikkei, whatever you want to call it, we literally swept the all-time high that was put in around the 90s, Jan 90s, right? So we swept that all-time high, and then we broke high time frame structure back to bearish, and then on the perfect retest POY, we put in such a high probability Model 1. So if you can break this low, you can definitely start making your way down to there. And if you break that, who knows what's next, right? And this is all obviously indices overall. And this was just a very nice short opportunity that, again, a trade like this, being able to time such a fast move in the market and benefit off of it, it can net you more than literally your entire crypto portfolio in the long run. I'm telling you guys, if you just start learning how to trade, you will literally at a point not even care about crypto anymore because you compound your 5% each week. I'm telling you, it's life changing. And at the same time, your investing game will improve as well because you can actually do TA. So with the knowledge that you already have with narratives and all this and that, combined with proper TA, you're going to be an unstoppable force. Okay. Now, lastly, I want to quickly talk about the USDT dominance chart because that was a very good indication to use as a confluence for all your high time frame swing long spot buys. Okay. Because we were talking about this POI for a damn minute, which was literally, it was this liquidity POI right there, which was that local return to zone that you could sweep coming into that block. And we just front ran the block itself right here. Like we just front ran it, but we grabbed the liquidity to like the tick. Okay. So obviously price is shooting up. And this works for the people that don't know. This works anti-correlated to Bitcoin and that's also mostly to your altcoins. The fact that this comes into your resistance POI while some majors like a SUI, for example, are coming into their key POIs, it's the same story every single time. Okay, it's the same story every single time. And you can benefit of these moves so well, but you only need to be aware. Okay, that POI was there for a long time, ever since we swept that low. Somewhere in December, we mapped out that POI as a possibility. Now, initially, we got a low time frame pullback after sweeping these triple highs that we were talking about, and then we grabbed most of the liquidity right there. But it's so nice to use as confluence. USD dominance has been extremely, extremely nice to use as a confluence for your high time frame crypto setups. Okay, and also on the low time frame. For the people in the Discord, you guys know there was like 2 weeks ago, every single accumulation on Bitcoin was like matched with an even higher probability distribution on the USDT dominance charts. Absolutely beautiful. And yeah, we're simply coming down. It was a very aggressive buy to sell, so you can't really use it, and you can't really use market structure to confirm potential entries. But yeah, hopefully we reject down a bit more before finding some sort of a bottom, and then in the process of doing so, kind of confirm like this as like a 12-hour supply zone. The price can come back for later on to reject, which would equal, if something like this happens where you go down and then you slowly come back up for it for a lower high for a lower low, this would correlate into Bitcoin going up a bit more before finding that, or Bitcoin going up a bit more before finding that pullback for the higher low for the higher high. So this would be a lower high. Bitcoin, this will be a higher low for the higher high. Ether would also be your higher low for the higher high, and kind of similar on each altcoin. Okay, but just as a little side note, I saw a lot of other people talking about some hidden shit in there. I don't really use that. I just had this liquidity POI where that you could sweep coming into that block, and it's just very, very impressive how dominance charts like the USDT actually perfectly react to these liquidity levels. Okay. Morja is asking a question. On ETH, you said you didn't have the confirmation for the long, but you didn't go on lower time frame. When do we go on a lower time frame to confirm? Okay. Yeah, so you said you didn't have. Do you mean the current long on ETH, like the current bounce on ETH, or do you mean the previous accumulation? Because regarding the current bounce, I don't have to go to a lower time frame to see that there's going to be no range formations, because range formations take time, and I like to trade my ranges, right? And that was just a massive V-shaped recovery. So there's no confirmation there, even on the lower time frame. You can use a break of structure if that's your style. I just have my set of rules. I like to enter on the distributions and be in a position prior to an aggressive move happening. And in the previous accumulation, if you want to have a very detailed explanation on why there was no confirmation, I went over that Friday very extensively, but just zooming in, this is your third tap, right? That's your third tap. There's no breakup structure in here. We're talking about, as a reminder to all of you, we're talking about an 18-hour plus, a daily plus. We're talking about a daily plus accumulation. And if you zoom in on your higher low pivot point, look at this. It's terrible. It's terrible. There's nothing. Right here following your structure, you had lower highs and lower lows. And then price SFP'd your 10-minute market structure high, created a Model 1 distribution, SFPing that high right here, 1, 2, 3, came down to just continue with this buy-side liquidity trail and then go up. Like that's not what you want. You want to take out the low and then you want to break the high. And if you have a 1-minute breakup structure in here, that's not going to cut it, especially if you SFP the 10-minute high with a distribution. So definitely not any good confirmations here, even on the lower time frame. I shorted both SPX and Nvidia thanks to you. Man, that Nvidia is a fucking banger. I don't know what Nvidia is doing right now. Oh, yeah. Yeah, man, that Nvidia, what is that? 23%? Damn. That's crazy. That's crazy. I do hope your entry's from here, though, because if your entry is not from there, you're a bit late to the party. So definitely make sure the entry is from the breakup structure confirmation there. But yeah, that's sick. That's sick. Now, there's always the possibility regarding Nvidia. We have our extreme demand right here. You can always bounce from extreme demand, go over into an extended model, or go over into an extended model where you take the highs and then you dump down and you create a higher time frame distribution. I've seen this sometimes on like macro models where, this would be, would this be 3-day? It would be like 5-day. Yeah, it would be like 5-day. Will be a 5-day model 1 where these two taps get invalidated and turned into one tap based off the lack of 6 candle rule in between here. And then you have something like something like this. 1, 2, 3, boom. Okay. Something like this. That's always still a possibility if you truly want this to go over in the macro distribution. But don't worry now. Don't start stressing. You already have a confirmed one that should be in great profits and de-risked, literally. So yeah, great job, brother. Okay, I'm going to finish it off with Bitcoin dominance because there is actually something interesting to say about that. That is that, this could be the start of your high time frame distribution. So initially, right, it's very funny how things are playing out. Initially, I was watching this internal range for a lower high, for a lower low. But on that aggressive flush, price absolutely pumped up. Now, at the same time, yesterday, or not yesterday, in the last stream, I keep on saying yesterday, but in the last stream, okay, I talked about how every single time that Bitcoin dominance started a high time frame reversal, prior to starting that high time frame reversal, it has an aggressive buy-side liquidity sweep. Every single time, it has an aggressive buy-side liquidity sweep. So I'm like, is this going to happen again? Now, what we're seeing right now could be a very aggressive buy-side liquidity sweep where, the low time frame, or not the low time frame, but kind of like the daily Model 1 distribution that broke down just to turn this into a bigger range where now this can turn into a distribution, right? If we see something like this, guys, if we see price go down, mitigate this structure demand, if we see price go down, mitigate this structure demand, and slowly pull up, where then the third tab meets all the requirements for a Model 2 distribution, that's going to be a generational call, okay? That's going to be the rotation. You're going to make your way down to here. And then I do believe you're going to make your way down to here. And at that point, you should be flushing a bit, right? But this could be the start of your distribution. It's a bit too early to tell, but I find it very funny that I was literally talking about this last stream, and I was like, every single time before we dumped, we had an aggressive buy side liquidity sweep, and we literally got it right here. So I'm going to pay close attention to how this is going to be. Obviously, if I see that confirmation, that's going to be bullish or more bullish for alts, because they should be starting to outperform Bitcoin. And we're going to see if we can catch some nice trades. And man, it's pretty funny. The general order flow in crypto is that prices just kind of like slowly grind up / distribute for 45 days to then reverse it in a few days. It's like we have spent so much more time in consolidation / retracement territorium than we spend in pumping environments. But yeah, it's gonna be interesting. Very nice price behavior right here on SUI. No good entry right there on ETH. And yeah, all the scenarios are prepared and pre-planned inside of the TCT trading community. If you like my style of teaching, if you like my style of trading, guys, live trading, that's what goes on inside of the Discord trading community. Okay, so it's an amazing group of people, amazing group of like-minded individuals, all wanting to be better, all striving to be better, all grinding hard, keeping each other accountable, and we're absolutely delivering that input in there. Okay, we're fucking grinding our asses off. So crazy day, crazy Monday, crazy Sunday to Monday open, absolutely insane. Market has been shaken out. Most people lost hope. We're gonna watch for our local range plays. We're gonna compound that 5% a week, like we have been doing this month. I'll be giving an update after the stream regarding the performance that has been shared in the server so far, and at the same time looking to allocate into different spot plays, spot positions. Some spot orders did get filled, and I will see you all in the stream on Tuesday. Okay, but very important, if I want to give you one reminder that you can take from the stream, please start analyzing yourself more. Please just be aware. If you are aware, you do not need the opinion of all the people that you are following. Filter out the noise, reflect back on your own behavior and your own patterns, and identify certain triggers that might, come in the future that can prevent you from making impulsive decisions. Because if you're simply aware, that means you're prepared. And if you're prepared, you're going to nail the markets. Okay? Shout out to every single one of you that's still in the stream right here. And not just in the stream, but in the crypto market. Okay? I'm telling you, if this was my first cycle, I would be smacked up left and right. Beat up left and right. I'm blessed that this is my second cycle. And I've spent 4 years in the charts every single day ever since to have the experience to kind of navigate it extremely, pretty good now. If this is your first time and you're listening to me right now and you're still here after this beating up that the market has given the general holders, give yourself a pat on the back, because just by being here, you're already beating 99%. Okay? So I love you guys. We'd love to see all of you in the server as well. And I'll see you all tomorrow. Peace out.